Hello traders, welcome to a new educational video here on the channel. Today, just like I did last week with a volume profile for beginners video, I'm going to now be making a footprint chart for beginners video. I had a video similar to this about 3 years ago on my channel, 2 to 3 years that I released, but I wanted to make an updated version. This is going to be very to the point, simple to understand, all the basics of what a footprint chart is, all the elements and the different types that we have and the uses that we're going to have for it when it comes to order flow trading. As always, make sure to subscribe, hit the thumbs up so you don't miss out on any videos, and let's dive right into it. So let's start off with a definition. Footprint charts are a type of candlestick chart that provides additional information such as trade volume and order flow in addition to price. It is multidimensional in nature and can provide an investor with more information for analysis beyond just the security's price. Okay? These charts work best in thick liquidity markets. So ideally, what I use them in is CME futures, like equities, for example, the ES and the NQ, SP 500, NASDAQ. Those are the only two markets that I day trade. You can also use it on the DAX, Euro stock. It works also with other countries' instruments, etc. Also, bonds like the US Treasuries or German bonds like the Bund. With cryptos, you can use it with very high volume coins, for example, Bitcoin. Now, cryptos are not a centralized market, so the volume information we get is going to be different depending on which exchange we're looking at. So I would recommend, if you're going to use this, using it in the biggest exchanges to reflect high volumes and liquidity. Okay, I get this question a lot. Can I use footprint charts to trade Forex? The answer is no. You cannot trade spot Forex or CFDs, contracts for differences, with footprint charts. The reason, again, it's decentralized markets. There's a lot of you don't get the true volume information that is going on related to all the trading that is happening by central banks and everything in the Forex markets. You can use currency CME futures. For example, the 6E would be the equivalent of Euro US dollar. 6B would be the equivalent of the pound dollar. But since the spot FX volume is so much greater than the data information that you're going to get using currency futures, might not be that reliable for trade signals. So for all intents and purposes, I'm going to be talking in this video specifically focusing on big equity indices and also big thick bond markets and big volume cryptos like Bitcoin. Footprint charts work on all types of charts, so you can use it on a time-based chart, volume-based charts, or volatility-based charts. So for example, you can use it on a 5-minute chart, you can use it on a tick chart, on a range chart, etc. And they're especially useful in shorter time frames or periods, okay? I've never used footprints on a time frame that's higher than like a 5-minute. I usually look at a 1 or a 5-minute, or I use some kind of tick chart, for example, 3,000 ticks on the ES market. Okay, the reason for this is that for me, footprint charts gives us the best short-term information in order to be able to make very quick trading decisions. So I do not think there is really a use to use footprint charts like on an hourly or a daily chart, because you're just going to be looking at information that you're not going to get that immediate signal in order to act within the day trading frame. So let's talk about first just a basic candlestick chart. We would have something like this, and you can see I highlighted this little candlestick down at the bottom, this green pin bar, and we're going to use that as an example to now look at this in different points of view. So now here we have that 5-minute candlestick chart, and when we see a candlestick chart, this is also called sometimes OHLC candlestick, open, high, low, close, because when you have a candlesticks, that's the 4 pieces of information that you're going to see. You have an open. In this case, the open is at the bottom of the body because this is a bullish candlestick. We have the low, high, and the close. Obviously, if the close was below the open, then we have a red or a bearish candlestick chart, or whatever color you want to use. Okay? Now, if we want to look deeper into the detail of this candlestick, normally what we would have to do then is drill down into a lower time frame. So if we go into a 1-minute time frame, this 5-minute candlesticks is made up of this 5-minute candlestick. So you can see we opened up in here on this candlestick, we went all the way down here, then we reversed and pushed all the way up here, and then we ended up closing at this point, which is reflected as the 5-minute chart. So you do get more detail, but we still don't know what is going on inside. Like, we can see, okay, we had this rejections down at the bottom. That's a nice bullish, signal, but we don't know what the buyers and the sellers were doing at these levels or at these highs, etc. That is the value that we get on the footprint chart. So a footprint chart is almost like if you're looking at an X-ray of what a regular candlestick chart is going to be. Okay, these 2 candlesticks are the same thing. They're just 2 different ways to represent footprint charts, and I just wanted to put both because you're gonna see me using both throughout this presentation. Generally, I like this one better. I like to have the candle shape between the columns of the bid and the ask in this case, but other platforms might show it like this. There's a lot of different customizations, but this is probably the most basic way to see it right here. Okay, so you can see now with the footprint chart, we have the same information of the open, low, high, and close, but within this, we also can see exactly what the buyers and the sellers were doing at every tick level. Every market is going to have a different price scale, and a tick is the smallest measurement that we have on that price scale. So for example, this is taken from the SP 500, the ES futures market, which is comprised of 4 ticks for every point. So that means that for every point, we get 4 ticks, and every tick is going to be 0.25 points, okay? And so pretty much every level here is going to be equivalent to 1 tick in the ES market. Now, one thing that we got to talk about, and this is very important to clarify, because a lot of people, when you talk about footprint charts, they're very confused in that they think the numbers on the left are buyers and the number on the right are sellers. But this is actually the inverse, okay? When we look at a DOM or a footprint, a DOM or a depth of market, which we have right here, shows us the resting orders for a particular instrument. These are passive buyers and sellers that are waiting for their limit orders to be triggered by more aggressive market participants using market buy or sell orders. Okay? So when we're looking at a DOM like we have here, this is just a little short video showing the dynamics of a DOM. You can see we have bids on the left, asks on the right. So everything here, these are resting limit orders to buy, and everything here above, and these are always below where price currently is. And then on the right, always above price, we have the resting limit orders to sell. Okay, if we only had passive market participants, the market would simply not move, because we would just have people, orders to sell all the way up here, orders to buy down here. But if no one is willing to get aggressive and pay up in order to buy, or pay down in order to sell and get short, the market would be stuck. That's why we need, for every buyer there's a seller, for every seller there's a buyer. So that means that if someone wants to get aggressive and immediately buy this to go long, it means they're basically hitting market buy and they're getting executed at the next best available price on the ask side. Okay? And depending how thick or thin the market is, this is what we call liquidity. The more amount of orders we have resting on the bid and the ask, the more liquid or thick a market is. Okay, so for example, you can see here, we have like 15, 13, 14 or so. So that means that if we have a big aggressive buyer that places a market order to buy 50 contracts at once, they would go from here and it would fill all the way up into here. So that would be, he would move the market up 4 ticks and he would immediately now be long. But the fill that he's going to get, or he or she is not going to be good, because you're going to get slippage. The thinner the market is, then the less likely you're going to get a good fill at the next price level. Now, if we're talking about retail investors, which most of us are retail investors, this is not really going to be an issue, because we're just going to be trading 1 or 2 or a few contracts at a time. So if you're using a big market, you should be able to just immediately get filled at the next tick level available. So you're pretty much only going to be giving up 1 tick in order to get executed. Okay? But it's very important to understand that distinction, that when you look at a DOM, these are passive limit orders, and when you look at a footprint, it's going to be the opposite. A footprint chart shows us the executed orders by aggressive traders. So while a DOM is dynamic and constantly getting orders added and pulled at different price levels, like you can see here, these numbers are constantly changing as traders make decisions to change or add or subtract orders. When we look at a footprint, we are looking at finalized executions. So if we're talking about what the most up-to-date or immediate indicator we can use is, it is going to be a footprint chart, because this is showing us in real time, instantly, what it is getting executed at every price level. Okay, so when a trader makes a market buy order, they are lifting the offer and getting immediately filled at the best price available. So if you're a buyer, you're going to be looking at the top right, because you're looking to pair your market buy with a limit sell order. And then vice versa, if you are a seller, then you are hitting down the bid in order to get short at the best price available. And then based, like I said, on your position size, that depends what price level you're going to get. And you're going to be looking at the bottom left. Okay. So if you look at the footprint here, all these numbers that we have on the left side, these are aggressive sellers that hit the bid in order to get short at each of these levels. And if we look at the right side, this is aggressive buyers that were lifting the offer and were getting filled at this price levels in order to get long. Okay, so let's continue. Let's talk about the anatomy of a footprint. So like we said before, executed sell orders are on the left side. These are aggressive market orders that hit the bid on the DOM, and then executed buy orders are on the right side. These are aggressive market orders that lifted the ask or the offer. The total candle volume would be all these numbers, bid and ask, added together would give us the total volume for this candle, which in this case, this one was a 13,400 contract. This is a 5-minute candlestick on the ES market, by the way. Okay. And now let's talk about delta. This is a very, very important concept. Delta is something that I use on all my day trading strategies. Different ways to work with delta. We're going to be talking specifically just about delta on the footprint. So delta refers to the executed buys minus the executed sells. We can measure deltas at each tick level, or we can do a delta for the entire candlesticks, basically by subtracting all the buys with the sells at every price level. We just do each price level, buys minus sells, then we add it all up, and that's going to give us the total delta for this candlestick. In this case, this candlestick was a minus 163. So this in itself is actually a bullish divergence, because that means that even though we ended up with a green pin bar candle, there was more aggressive sellers than buyers. And if we see down over here, you can see how we had a lot larger numbers executed to sell versus buy near the bottom of this candlestick, which in itself is a signal of absorption. Okay, but those are concepts. I have a lot of other videos talking about this. Also, my trading courses, I go into great detail on this. But basically, this is just one of the great uses of footprint charts, is to measure absorptions. So, continuing with the anatomy. So again, delta executed buys minus executed sells. Okay, and so if we measure this candle now, we can see the total delta was 90. The total volume was 786. So that means that if we add all these executed contracts, we had a volume of 783 traded within this candlestick. And if we take all the deltas, it was a positive 90. So that means there was more buyer aggression. So how do we calculate this? Well, simply this is a bid by ask footprint. So we have here at this price level, 61.4525. If we add both numbers together, we get a volume of 31 contracts at this level. And then for the delta, we just take aggressive executed buys 24 minus executed sells 7. That gives us a delta at this tick level of plus 17, okay? And if we repeat this at every price level and then add up all the results, we're gonna have a plus 90 delta. So this was overall a more aggressive buying candle. And there was no divergence here. You can see we had a very nice bullish candle close on the top, so this showed some good buying momentum. And this highlight that I have here, just like with volume profile, you can have on every candlestick what we call point of control, which basically just means the level that we had the most contracts executed. And you can see here 98 by 81, so we had 179 contracts traded at this tick level. So this would be what we would call the point of control, or the point of the maximum executions, and within this candlestick. Now, every trading platform or software with the footprint will let you show different statistics at the bottom, giving you information for each candlestick on the chart. This is specifically using Sierra Chart, which is my favorite platform to use for this. And if you're interested, I actually have a lot of footprint chart books available on my website, which I'll link down below. Volume and delta are generally the base statistics we're always gonna track, but there's a ton of other ones that you can put in depending on what information you want to see. One useful one would be the cumulative delta for the day, which basically all it does is from the very start of the session, it just starts adding up every delta from every candlestick that's printing and running a total. So this is going to give us a good signal as far as who has been more aggressive within the session, and we can look for divergences and signals compared to what the chart is telling us. And I have videos specifically for that, looking at CVD or cumulative volume delta divergences. But the way it works, you can see here we had, the cumulative was 235 delta. Then we had this candlestick, which has a delta of minus 425. So we just subtract this from the total, and now we have 190. Then the next candle had 430 positive delta. So we add it to the total. Now we're at 240, etc. And you're just running a total for the session of the day of what the delta is. Now, let's talk about the different elements and things that we look for in footprint charts that traders use in order to help them make trading decisions. So, buy and sell imbalances. An imbalance in footprint is when buyers overcome the sellers or vice versa. When looking at the imbalance, we compare them diagonally from the bottom left to the top right. Okay? So when we're looking, this goes back to what I was talking about in the DOM, how aggressive buyers have to lift the offer to the top right. Aggressive sellers are hitting the bid to the bottom left, because all the resting buy orders are here, all the resting sell orders are here. So when we're looking at a footprint, we're in a bid and ask footprint and look for imbalances, we're going to be looking at the numbers this way. We're going to compare them diagonally from the bottom left to the top right. Okay? An imbalance happens when a diagonal comparison in executions is 300% or more in difference in size. Okay? So what does that mean? Well, you can see, for example, this highlight here, we have 62 aggressive buys executed versus 295 executed sells. So that's why this 295 has a red highlight, because there is a difference of greater than 300% between the volume of selling versus the volume of buying that we had when we're comparing the buyers and sellers over here. Okay, if we get several imbalances in a row, this is what we call a stacked imbalance, and they're much more significant because they're showing a lot of aggression. So right here on this purple highlight, you can see we had the market going sideways, and then we had this breakout to the upside, and then you can see here we have 3 stacked imbalances bullish. So that means if we compare these 3 numbers diagonally, we had a lot more than 300% difference on all of this between buyers overwhelming sellers. So that shows a lot of aggression and intent of keeping to push market higher. Okay, so this is one of the tools that footprint traders like to use. Next, we have unfinished auctions. Prices will tend to move until we hit a swing point where there is no more buying or selling interest. If we're going up, once no more buyers are interested, then the market will begin to turn, and vice versa. A finished auction is when we have 0 bids or buys at a high. So for example, this one's right here. And or 0 offers or sell at the lows like we have over here. Okay, if there is no 0 at the extremes, it signals an unfinished auction. This in itself is not a trade signal. Like, it doesn't mean that just because it's unfinished you're going to get long or short immediately. You're just using it in the context that market tends to want to be as efficient as possible. And so this is a signal that this level might not have been completely finished yet, and we could be due for a retest in order to properly finish the auction. So you can see here on these 2 candlesticks, we still had some interesting sellers here at the top left. Okay, so in this case, interested buyers. We still had interested buyers here at the top of this candlesticks, but then we get this push up, and then you can see here now we have 0 on the bid. So that means that there is no more interest in here, as far as we have 0 offers, 0 bids at the highs. And so this is a signal that this auction has been finished, and then the market comes down. We have another one here, and that eventually gets taken off as well. Okay, so the unfinished auctions this is not a concept that I actively use in my strategies, but it's something that is important to know, that in general you're going to want to see a 0 on the highs on the bids, and then you're going to want to see a 0 on the ask on the bottoms on the ask or the sell side. Okay, now there's different ways to see footprints. I'm just going to show you, your trading platforms are going to have different ways that you're going to be able to customize them. The most classic, like we talked about, is the bid by ask. So we have all the aggressive executed sells on the left and the aggressive executed buys on the right. We have volume by delta. This is actually one that I like a lot. where the left columns is total volumes at each tick level, and on the right we have deltas. So basically you can see here 251 traded up at the high here, and 251 green delta. So that means that there was 0 sellers and only aggressive buys executed at the top here, okay? Because there was pretty much 251 minus 0, and that gives us that number, okay? Etc. And you can do this for everything. For example, if we take this one here, 799 total, delta was minus 91. So then you can just make up the difference, and then you would come up with, how many buyers there were. But this is just a way to look for high executed volumes. This example, the purple highlights are over 1,000 in volumes, and the orange over 1,500 in volumes, for example. You can have delta volume profile footprints, where you have basically a profile formed depending on the levels of delta that we have at each price level. So you can see when we have high deltas, then we get a bigger highlight, for example. And that's different ways that we can see deltas on there. Okay, so that's pretty much it for the video. Hope this has been insightful. Again, remember to hit subscribe, hit that like button. I'm gonna pin down more footprint chart videos that you should watch on my channel to further help you in understanding this concept. But this is a pretty in-depth, good introduction to all the basics of it. I hope you enjoyed it, and I will see you all soon in the next video. Take care.